how do you withdraw money from an RESP? Are there taxes involved? What happens to an RESP if the child decides not to go to school? We answer these questions, and more, in this video. Hi. My name is Kat and I'm a chartered professional accountant. On this channel, we discuss Canadian tax, accounting, and personal finance, with the goal of helping you keep more of your hard-earned money in your own pockets. Today's video is part 2, all about the Registered Education Savings Plan. We'll go over how withdrawals and taxes work in an RESP. What happens if the child decides not to go to school? In part 1, we discussed what the RESP is, how it works, and the grants you can receive inside the plan. If you haven't seen it yet, I recommend watching part 1 first and then coming back to part 2. At the end of this video, I'm going to share a tip to help you manage your RESP and avoid paying extra taxes. So let's jump right in. First, how do you withdraw money from an RESP, and are there any taxes involved? For starters, withdrawals depend on the source of the funds inside the RESP. The money inside the plan can come from 3 sources. 1. Contributions made by the subscriber. As explained in part 1, the subscriber is the person who opened the RESP. 2. Benefits, or grants, received from the government. And 3. Income earned within the account, such as interest and dividends. Since there are 3 sources of funds, there are also 3 types of withdrawals from an RESP. The first is called Educational Assistance Payments, or EAPs. These payments are made up of the benefits or grants, as well as the income earned within the RESP. This is what is paid to the beneficiary, or the child who is attending post-secondary education. EAPs must be used to pay for eligible education expenses. We'll go over a list of what these are later in the video. Educational assistance payments are considered as income for the beneficiary. In other words, the money is taxed in the hands of the child. Usually, the child has very little to no income while attending school, so the taxes typically end up being 0. There are conditions which must be met in order to qualify for EAPs. We'll dive into them after going over the other 2 types of withdrawals. The second way to withdraw money from an RESP is by having the contributions refunded to the subscriber or to the beneficiary. Since contributions were made with after-tax funds and there was no tax deduction when making the contribution, unlike when you contribute to your RRSP, these withdrawals are not taxable. However, if the contributions are withdrawn at a time when the child isn't eligible for an EAP, any grants received will need to be repaid to the government. This is why it's important to wait until your child is attending post-secondary education and has met all of the required conditions before withdrawing your contributions. The third type of withdrawal from an RESP is called Accumulated Income Payments, or AIPs. This is the withdrawal of income earned within the RESP, but only in the case where it's not paid to the beneficiary via an EAP. AIPs are paid to the subscriber and are taxable at the regular income tax rate of that individual, plus an additional 20% tax. So, if you were thinking of using an RESP as a tax shelter to grow your money, that's a bad idea. You'll pay more taxes than if you had invested the funds in an unregistered account. Plus, there are several conditions which must be met to be able to withdraw AIPs, and the RESP has to be closed by the end of February of the year following the first AIP withdrawal. For example, if an AIP is withdrawn in March 2025, the account will need to be closed by February 2026. Now that we've discussed the 3 types of withdrawals, let's go into more detail regarding EAPs, since that's the main reason why an RESP is opened, to help pay for your child's post-secondary education. Before we go on, if you've learned something so far, please take a second to give this video a like. It really helps the channel. The beneficiary must meet 3 conditions in order to receive EAPs. First, they must be enrolled to study at an eligible school, a list of which is available on the CRA's website. Proof of enrollment will need to be provided to the RESP promoter. Second, the program or course must last a minimum number of weeks and hours. Full-time programs within Canada must last at least 3 consecutive weeks, with a minimum of 10 hours of instruction or work per week. Full-time programs outside Canada must last at least 13 consecutive weeks, or 3 weeks if it's a university program. Part-time programs must last at least 3 consecutive weeks and require the student to spend at least 12 hours per month on the courses within the program. Third, the money must be used to pay for allowable educational expenses. The RESP promoter could ask for receipts as proof that this is the case. So, what are eligible expenses for EAPs? Some obvious ones include tuition, course materials such as textbooks, and student fees. But did you know that you can also pay for the following expenses using EAPs? Moving expenses to and from school. Housing while away at school. Basic furniture. Other items you might need such as bedding, kitchenware and towels. A computer. Phone and internet bills. Basic personal needs while at school, such as food, clothes and toiletries. And transportation to attend school, but also to return home during holidays. The final important point regarding EAPs is that there's a maximum amount of money which can be received. For full-time studies, the limit is $8,000 for the first 13 consecutive weeks of enrollment. After this period, there's no more limit as long as the student still meets all of the eligibility requirements. For part-time studies, the limit is $4,000 for any period of enrollment of 13 consecutive weeks. Next, let's talk about what happens to the RESP if the child decides not to attend post-secondary schooling. There are basically 4 options. 1. You can leave the account open in case the child changes their mind in the future. As mentioned in Part 1, RESPs can stay open for 35 years. 2. You can replace the beneficiary. You'll need to ask your RESP promoter how to proceed and be mindful of overcontributions. This could occur if the replacement beneficiary already has another RESP. 3. Transfer the money to another registered account. This could be to another RESP, but, once again, you need to be mindful of overcontributions. The money can also be transferred to an RDSP if specific conditions are met. Finally, up to $50,000 can also be transferred to the subscriber's RRSP in the form of an EAP, as long as they have enough contribution room. Last, you can close the RESP. In this case, any benefits received will be returned to the government and the contributions will be returned to the subscriber. As for the earnings, they can be paid to the subscriber via an EAP, transferred to another RESP belonging to another child, the subscriber or their spouse, or gifted to an educational institution. Note that your RESP promoter might have their own conditions or penalties for closing the account. Now that we understand RESPs in detail, I'm going to give you a tip to help you manage your account and avoid paying extra taxes. Since there are limits involved with an RESP, it's essential to track the contributions made for each beneficiary, as well as the grants each of them receives. This is particularly important if a child is named as beneficiary to more than one RESP, or if you have a family plan where more than one child is designated as beneficiary. As we saw in Part 1, contributions can't exceed the lifetime limit of $50,000 per beneficiary. If you go over this amount, you'll need to pay a 1% tax per month on the excess. Additionally, each child can't receive more than $7,200 of CESG. If this happens, the excess amount will need to be refunded. Bottom line, it's important to know how much has been contributed for each child, as well as the amount of grants received by each beneficiary. Not keeping track of this could end up costing you down the line. So there you have it. We discussed how withdrawals and taxes work in an RESP, and what happens if the child decides not to go to school. I also shared a tip to help you manage your RESP and avoid paying extra taxes. That's all for today's video. I hope you found the information helpful. Don't hesitate to ask your questions or submit special requests for future videos in the comments. Be sure to hit that notification bell if you want to be the first to know when a new video is released. Thanks for tuning in, and I'll see you next time.